Well, it is Thursday, September 2nd. We're here for our daily market update, talking about the BTX method and how things are rolling right along. So today's Thursday, so we're just gonna run through very quickly. And I know I'm doing this video way earlier than I typically would. I've got an MRI coming up for my shoulders here in about half an hour. So I'm gonna get this video out, talk to you guys about what we're looking at for the day. Then I'm gonna get out of here to get back in time for the regular market session. So anyway, what are we doing today? Let's start over here, right here on this screen. First things first, news. We don't have any high impact news coming up. High impact is the red reports. Today should be a fairly normal trading day. Tomorrow, however, is non-farm payroll. So the off hours leading up to this could certainly be interesting, and then we'll see how the regular market reacts to it as we get underway tomorrow morning. But for right now, all we're really doing is the same thing that we do every day, which is just watch the market and trade in the direction of the trend, unless we've got something really setting up for us as a channel where we can look at both directions off of that channel. But until then, trade the direction of the trend. The trend is your friend, as they say. What are we seeing today? Well, same thing we saw yesterday for the ES, for the S&P. We're looking for, there's that cat. Hang on one sec. I apparently forgot to shut the door, so the cat came in talking when I started talking. Anyway, the S&P, we're looking for long trading opportunities. We've got the 30-minute is long and the 4-hour is long. So what we'd like to see, a little bit of a pullback, lower highs, lower lows, and then a breakout back in the direction of that current market trend, right? Now, same thing I said yesterday, 45.15 setting up as kind of a bottom channel here. If this pushed down and broke below 45.15, just take your finger off the button and walk away. Let it set up. We may not see that really until tomorrow, but you know, for right now, we're looking for long trading opportunities. If it did push down this far, more than likely, if it pushed down this far to 45.15 area, your short-term moving average would have crossed anyway, telling you to stay out of the market. But in the event that it pushed down and that didn't cross over yet, if it goes down to 45.15, closes below that, I would say just walk away. It's a mixed market at that point and could push lower. I'm not saying to take short trades off of it, just simply saying that it could push lower and just stay out of it. Stay away, right? You don't have to do anything. I'll talk tomorrow when we do a recap of the full month. I did this it might be a couple of months now. Just overall talk about who the market participants are in the marketplace, what the goals are of the overall market, and make a determination about whether you want to trade short or not based on what the market actually is overall. It's an important distinction that I think that needs to be thought through for each trader, and something that you might want to consider. So we'll talk a little bit about that tomorrow when we run through the monthly recap of all the numbers. We'll just talk a little bit about that, because I want everyone to have some idea of what the markets are designed to do, and you can use that to your favor to make a determination around how you trade and what your actual trading plan is. But anyway, I don't want to go down that rabbit hole right now, because I've got to get this done and get out and get these shoulders taken care of. So anyway, crude. What's going on with crude? Crude, we're in a long bias again. We've got the 4-hour that's long, the 30-minute is long as well. So we'd like to see the market pull back a little bit, making lower highs, lower lows, and then push back in the direction of that current market trend. If it breaks back out above that, we would play the top of that previously closed lower high. So we need to wait and see that happen. If it just stays range bound, which it has been for a while, then we'd just wait. We talked yesterday about 68.20. Said if it broke below it, keep your stops tight. Maybe look at take profit if it goes 2-to-1 from your initial stop. Certainly had opportunity there if you wanted to play that counter trend trade. Don't always recommend those unless we've got a really tight channel that's setting up that would give us that opportunity to really play that counter trend. But overall, trend is your friend, and stick to the ones that are going to go back in the direction of what that current market is doing. Remember, the market's like a freight train. We want to take a ride, not jump out in front of it. Over here on gold, same thing. Gold, we've got a 4-hour bias is long, 30-minute bias is long as well. So we'd be looking for long trading opportunities. Want to see the market pull back like it did yesterday, making lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, and then play the breakout as it pushes back in the direction of that current market bias. Yesterday, it pushed lower, and then bang, it pushed back out higher, broke above that previously closed lower high, and actually moved up enough to get us into a little bit of profit. It didn't go as far as I would have liked it to have gone, but it did lock in some profit here by trailing my stop, and would have potentially given you a little bit of a win there for the first day into the new month. So that's it. I don't have a whole lot of prognosticating to do for you guys. I try to stay away from that, because ultimately what you think, what I think, what anyone thinks is going to happen is totally irrelevant. It's all about having a consistent, I know I say this every day, but it's the truth, having a consistent way of looking at the market with quantifiable reasons for doing what you do is the only way you're ever going to be successful in this. Let all of it go. Forget about looking at the news. Forget about trying to figure out what you think is going to happen and what might happen. Forget it all. Let the market do what it does. Trade with a quantifiable way of interpreting the market, and then use that to your advantage to execute the same way over and over and over. That consistency is what gets you to profitability. So, I'll wait until tomorrow to go through the numbers. But, August, just following exactly what we do here, you wouldn't have taken a ton of trades, but you would have had another potentially profitable month if you had just stuck to the system and done what we talk about every single day. So, that's 7 out of the 8 months of this year so far that all you had to do was follow a quantifiable way of being in the market consistently over and over and over, boring as can be, to profitability. All right, that's it. Have a great